Ladies and gentlemen, welcome to a very special episode of the Midday Market Monitor. In today's video, we are going to be going through what is happening in the markets, how the stocks are performing, talk about both equity assets and crypto assets as well, as those are starting to see quite a strong comeback. We'll talk about the stock draft a little bit, but mainly this is going to be a conversation around Nvidia. Nvidia has probably seen somewhere around 7 to 8 very, very large stories over the weekend and even pushing into today. Many people know this is my largest stock holding in my portfolio, making up for roughly 50% of my entire, portfolio allocation. So, in today's video, I'm also going to be going through my prediction for Nvidia's results, not the stock price. However, we can talk about valuation and where I believe it should be. But overall, what we're going to be talking about is the actual numbers, revenue, EPS, that sort of thing. Before we get into that, I just want to take a quick glance at the markets in general, as we're seeing red for both the S&P 500 and the NASDAQ right now. S&P down 0.2%. NASDAQ down 0.44%, leaning to some of those sell-offs being a little bit more focused in the tech side of things. But we are seeing some, and maybe there's a little bit of sell-off starting on Ethereum, but that BMNR is starting to make a little bit of a comeback. We ended up seeing Ethereum touch $2,500, and we also got an update from Tom Lee's BMNR for their position sizes, their ETH holdings, the staking, all of this stuff. One of the most interesting things about that update, however, and let me go ahead and bring that up for you, is what they also talked about, what happens with Ethereum whenever it has a run like it has just most recently. So if you end up looking back, and we can just see here, starting in sort of August 19th, we ended up starting to see a run that continued up and brought up Ethereum's price roughly around 30% over the last week. Okay. Well, that happens, and we see these 30% jumps. There's been two other times in recent history, May of 2025, in July of 2021, where we've seen these large 30% gains. Do you guys want to know what happens following those large 30% gains? Well, in May of 2025, and this is according to BMNR, right? So they ended up highlighting that they are done with their buybacks right now. They're actually acquiring and selling back shares because their MNAV is above 1x right now because of the large increase in overall Ethereum purchases that or purchase price. So it's so funny how these treasuries don't work, but then whenever the money actually flows back in, like Ethereum goes up 30% in a week, how much they can turn around that system and go from acquiring 7,000 Ethereum a week to now back to acquiring roughly 32,000. Still a long ways off from their high purchases of 100,000, 200,000 ETH per week. But take a look at this. Maybe we'll be able to get back into those large purchases if what Tom Lee says here happens once again. Both the instances following those 30% gains for both May of 2025 and July of 2021, Ethereum then saw subsequent gains of 170%. That was the bull run that we ended up seeing in May of 2025. In July of 2021, when they also saw a 30% gain, it then followed by 167+% gains. I mean, dude, give me 100% gain and I'd be super happy. Really quick, you guys are all saying Besant is live. Is this on the White House or CNBC? Is he live on CNBC? Oh, he is live. Over to that then.
Global isolation and a subsistence economy, or a path back to normalcy with an opportunity to rejoin the global economy. Today, we are launching Operation Economic Outcast to foreclose every other option available to the Iranian regime. Treasury has mapped every node, every facilitator, and every network that Iran has used to smuggle oil and evade sanctions. Beginning today, the actions of Treasury and other agencies will tighten the noose and block every potential source of revenue that funds the IRGC and the evil Iranian regime. We are enforcing a zero leakage approach. There will be no minimal breathing space for the regime to rebuild its capacity to inflict terror against America and the world. The final refuge of this regime is the mistaken conclusion of nations that still finance the Iranian threat in the hopes of evading it. It is no longer acceptable to operate in the gray spaces of this conflict. Countries cannot claim they are blind to enabling this activity. Iran's enablers purchase, transport its petroleum. They facilitate the flow of its finances through exchange houses and free trade zones. They welcome Iran's flights and maintain registries on its behalf. They turn a blind eye to seaborne fuel transfers and overland transits. They condone illicit use of their banks, all the while concealing the extent of their complicity. The president is making phone calls to world leaders with specific requests to cease their interactions with the regime. We are already seeing results. Over the weekend, comments from Iranian leadership clearly acknowledged the effect of this campaign, and nations that facilitate any interactions with the regime should quickly heed our message. Those who stand with the United States will reap the rewards of our partnership. Those who tether themselves to the Iranian regime should expect to share in the isolation of a withering regime. Teams from Treasury, State, and the US military are now meeting with their global counterparts to tell them that the United States expects action. Every country has a defined timeline to shut down activities we have identified. If they do not take action, we will do so unilaterally through Treasury authorities. For example, every branch of Bank Melay must be shuttered and dark. And let me be clear, any entity that facilitates money laundering on behalf of Iran will be removed from the US dollar system. The clock just started ticking. The new sectoral sanctions determinations issued today target 5 of Iran's most vital lifelines that it exploits in other countries: digital assets, technology, gold, aviation, and shipping. These measures broaden secondary sanctions risk for anyone foolish enough to continue conducting business with this regime, and will accelerate the speed with which we pursue them. As I speak, Treasury's Office of Foreign Assets Control is also sanctioning over 60 entities, individuals, and vessels around the world that enable the Iranian regime to procure illicit nuclear and missile technology, conduct cyber operations, and generate oil revenue. This is a sustained campaign to collapse every last option for Iran. Let there be no ambiguity as to the position of the United States. An economic engagement of any kind with this murderous regime will expose those responsible to the full reach of American power. For decades, this regime has drawn strength from a calculus that regards Iranian retaliation as certain and American enforcement as negotiable. Under President Trump, that era is over. To the ordinary soldiers supporting this regime, as more and more of your paychecks stop or are supposedly just delayed, ask whether your commanders are leading your country to triumph or to ruin. And recall that the Berlin Wall fell when ordinary soldiers decided not to shoot at their own people. And to those who enable Tehran, do not discount the cost of testing Washington's resolve. No nation should expect to enjoy the rewards of our system while helping those who seek to destroy it. It is now a time for world leaders to make a decision between prosperity and isolation, peace and terror, America and Iran. The campaign we begin today will gather force with every day that follows, and it will not end until this regime stands alone. With that, I welcome your questions. David from Reuters.
Hi, thanks, Secretary. One of the most powerful tools you have at your disposal is the ability to impose secondary sanctions on banks and financial institutions that facilitate transactions for Iran. Chinese banks have often been talked about being targeted, but we don't see any of those institutions targeted here. Is that something that is coming in this campaign, or is the very delicate trade truce with China something that could prohibit you from going that far and taking that very big step?
We want to make clear here today that no one is above the reach of U.S. sanctions. That if they facilitate transactions and are part of the ecosystem that turns Iranian oil into money, into repression, they will be targeted. We find that the best way to engage with countries is through quiet diplomacy, and we are level setting with every country to tell them our expectations. We know who they are, they know who they are, so when the hammer of U.S. Treasury actions falls upon them, they will have no one to blame but themselves. So, Richard from CBS.
Thank you, sir. Thank you. You said the president is calling world leaders with specific asks and that there's a defined timeline. Who is he calling and what are the asks?
We're not going to name names. That we've already seen some results, and that I am confident the president, as you all know, is quite persuasive, and we are following his calls up with calls from visits and calls from the State Department and from the U.S. Treasury, expecting them or telling the leaders, the countries, and the entities exactly what we expect and the timelines. And I would expect that very quickly, if they do not respond, then you will see the ramifications of their actions.
Can you say how far the timelines are?
Again, I'm not going to set timelines, but we do not have infinite patience here. Jennifer?
Thank you so much, Mr. Secretary. Jennifer Schonberger with Yahoo Finance. You just said moments ago that no one is above U.S. sanctions. What specific secondary sanctions or penalties is Treasury prepared to levy against Chinese banks and shipping firms if they do not comply? And then secondly, as you look to take these unprecedented sanctions, you've also said that as the Iran conflict fades and oil prices recede, that will help bring down long-term bond yields. In the meantime, you have mentioned your toolkit, and I'm curious if you are looking at reducing auction sizes for longer-term dated Treasury debt going forward, and what other actions you may consider from that toolkit.
Yeah, well, why don't we work backwards? We issued the quarterly refunding announcement 2.5 weeks ago. We are going to continue with our regular program of auctions. So you will be hearing from us again at the beginning of next quarter. In terms of, as I said, every country, every entity should know that they should be prepared to face U.S. sanctions. And no one is above this. We are going to hold everyone accountable, and this is economic asphyxiation of this regime. And Jennifer, as I said, no one should test our resolve. So, Josh from the New York Post.
You said you weren't going to name names, but there's been some reports that the United Arab Emirates is among some of the first nations to take seriously these words from the United States to cut off all business interactions with Iran. Is UAE leading the way in this respect?
I would think that the actions that they took last week were not coincident, but likely causal. And I would expect that we would see a broad array of countries taking similar actions as we continue our engagement. The UAE have been very good partners and have taken the brunt of the Iranian attacks in the Gulf. And what have these countries gotten over the years from appeasing Iran? They were subject to violent attacks. While we were bombing Iran, they were bombing them. So it shows that with this regime, appeasement does not work. And on the other side, with this regime, trying to buy appeasement will no longer work in the eyes of the United States of America. And I want to emphasize that we are spreading out across the world as we speak, that you will see a wave of sanctions when you leave this meeting today, and you should expect that cadence to continue. And I would expect that you will see a major announcement of a financial institution being sanctioned by the end of this week. So, Samira from Sky. Yep. No. No. Are you? No. I'm looking for Samira from Sky. No. Hi.
Does the United States and President Trump still want Canada to become a state? He did say that they're getting all the benefits of being a state without being one.
I think he would like Canada to come to the table and negotiate in good faith. They were offered quite a good deal last week. They chose to reject it. Unfortunately, Prime Minister Carney rose to power on an anti-American, anti-Trump platform. I believe he was more than 20 points behind. And he seems to have gone back to his old playbook. And I think one has to ask oneself, is he trying to benefit himself, the Liberal Party, or the Canadian people? Because they were offered a very good job. So, yep, you.
Thank you, Secretary Besson. If I could shift to bond yields quickly. We saw them tick down today after some turbulence and going up last week. Can you tell us if there's any possibility that there'll be more bond buybacks anytime soon?
Again, we haven't bought a single bond yet. The next time we have an operation is September 9th. So we will see on September 9th. All right. One more. Let's see. You in the front.
You described this as an economic D-Day, but D-Day wasn't a threat of an invasion, and the U.S. didn't give a timeline to Germany. So why not impose the sanctions today?
Well, we are giving everyone the opportunity to remedy bad behavior. Why would I want to blow up the global financial system? We believe that it is important to level set and give people a cure period, but they should know that that will move very quickly and that we are serious. Secondary sanctions are a very powerful tool, and we here at Treasury, this is Jean Lang, the acting undersecretary for terrorism finance. And in the Terrorism Finance Department and at OFAC, the reason we are able to use secondary sanctions is because we do not take their use lightly. So we believe that a warning shot and a level set of expectations is appropriate. And if people do not want to meet our expectations, then we expect, and they should expect, that they will leave the dollar system. Okay, thank you all.
All right, that was U.S. Treasury Secretary Scott Bessent at a press conference around Iran, saying that as of right now, the United States is launching what they call Operation Economic Outcast, saying the U.S. will lay economic sanctions against Iran and any country enabling it. The idea to close economic outlets for Iran. The secretary saying beginning today, the actions of Treasury and other agencies will, quote, tighten the noose that helps fund the Iranian Republican Guard and the country of Iran. Bessent calling it a, quote, zero leakage approach. Now, he added.
I I really like that he called out the average soldier and said, to those that are listening, the reason why the Berlin Wall fell is because the average soldier stopped shooting. Pretty wild that it's coming to this. It definitely looks like this war is not going to be short, multiple weeks. This is going to be drawn out for an extremely long period of time. However, I would not underestimate the power of the United States dollar, the control that they have in terms of disallowing transactions, potentially putting on sanctions into countries that will not listen. The potential that the United States Treasury alone has is a wild lever to pull. So while this does potentially point to an elongated period of this potential conflict, I think that the United States is put between a rock and a hard place. You know, I know people want them to end the war, but what does that mean? Does that mean, okay, drive the ships home and that's the end of that? Because no, you know, Iran and specifically the IRGC, which is potentially controlling a lot of these negotiations, which is literally a terrorist organization, is saying not only do we want guarantees of this never happening again, which obviously, you know, you could definitely figure out a way to sign that. Not only did the United States spend a lot of money to initiate this war, which may or may not, I'm not trying to pick a political side, but may have been a mistake, but we're here now, okay? Now they want them to also give Iran, you know, large sums of money to then rebuild Iran as well. So they almost have to double down on the expenses that the United States has incurred to start this war to then rebuild what Iran has already put out. They do still have control of the strait, so it's not easy for the United States to just simply go home. That's sort of the hard part that I have here. I do feel like they are in a rock and a hard place, and you're potentially going up against the largest and strongest military and owning the reserve currency and the biggest bank in the entire world. I mean, it's going to be hard to win a fight. So if they say, you know, the paychecks are stopping, you're no longer going to be able to sell anything. Yes, there might be hard times in the United States, and the S&P ends up finding newer lows during after the call. The call actually started quite well. The S&P really liked what Besant was saying, but now we're finding newer lows after that call there. But the idea that this wouldn't end up putting additional pressures on Iran, I think, is just silly. Obviously, the transparency that the United States has into many of the transactions that go on, like he specifically called out a large financial institution that may or may not be helping with some of the transactions that are going through, or even other countries. You know, it doesn't necessarily mean that we're going to bomb those countries, but it could mean that we end up doing trade deals with them. We really end up, which hurts the businesses, the people in those countries that rely on United States customers. You know, imagine if find out that Canada is one of those countries that's doing a lot of deals with Iran, and then they say, hey, we are going to stop trade with Canada or put on larger sanctions. Me as a Canadian citizen that's doing, my business is literally broadcasting to United States citizens. That would be greatly impactful to me. I would hate that ended up happening, and that would impact my life and my family's life. And that would go around the world for Chinese citizens, whether that's other countries in the Middle East or abroad. So, well, this is tightening. I think that it shows some of the levers that the United States does have. And while they are willing to negotiate, and like they said, they're not putting on sanctions today because they do want to try to have this resolved almost like a, you know, similar to the self-deportation. Please, without us having to go in and do this ourselves and cost us a bunch of money, how about you yourself handle you know, your situation with Iran on your own, but just know that this is a looming threat in the near future if you keep up doing what you're doing, and you know who you are. Yeah, and I said Iran a couple times, but it's not Iran. It's the IRGC, and that's quite different. You know, I don't want to put a blanket statement And Besant was very clear to not put a blanket statement over Iran. There's a lot of great people, but the IRGC is literally a terrorist organization. At least if you're a believer in Western values. Tanner, if you're going to use the United States to earn money, why not move to the United States? I have family. I've got aunts and uncles. I've got extended, like, if I want to bring a kid into the world, it's not as easy as just moving myself and my wife down there. I want those kids to know their grandparents. I want those kids to know their aunts and uncles and their cousins. And, it's always an important, I think in my lifetime, I'll live in the United States, but it is very hard to make a move like that. I've got deep roots in Canada, even though I don't, I very much like United States values, and I consider myself to be more of a United States citizen than a Canadian citizen. I sure as heck follow a lot more of the companies and the politics in the United States more than I do in Canada. But family's a big thing for me. That's not easy to move away from. Okay, you could commute. Well, I mean, that is the end game, but it's not that easy. By the way, you guys have laws, Although there was yeah, as Kelly says, it's just a nightmare process too. I know there were videos of like people that were just like walking into the country. It sure is not happening from from my side. I mean, I want to go to the United States, and that process for permanent residency, for citizenship, is a very, very, very long process. Yeah, as Kelly says, you could have zero ties in Canada and desperately want to be a U.S. citizen, and you still, you're crossing your fingers. Buy a gold card. I'm not, I'm doing well for myself. I'm not doing that well where I'm, I still want the portfolio to end up having gains. If I were to take out millions of dollars, doesn't work like that. So no, thank you. Okay. Get a second home in Northern Michigan? No, I don't know where I would go. I've always looked at the states with zero income tax, though. So I've always looked at Nevada, Texas, Florida, those sort of areas to move. My girlfriend's pretty set on, if we do move to the States, she wants to go to Austin, Texas. It's a lot of work for her there. And yeah. Okay. That being said, let's quickly talk about the draft. The draft is changing quickly, not necessarily in the percentages, but there's a huge bifurcation between the people who had really high beta AI proxies and the people who are a little bit more spread out and potentially picked what they thought was going to be the next theme. So myself, Matt, and Steve are leading in the green, and Chris, Amit, and Jason are in the red. And there's actually quite a large separation. I mean, it's actually pretty weird. Between myself and Steve, there's roughly about a 7% difference. And between Chris and Jason, there's roughly about a 7 to 8% difference. Okay. But the difference between Steve and Chris is like a 14, 15% difference. It's actually wild how that separation has happened. Like, you would think that we ended up grouping it this way, but it's just how those sort of picks ended up coming to be. And hopefully we continue to do very well. And I even break off from Matt and Steve and continue on in the upward trend. I mean, I definitely took some gambles betting on some value names and you know, a little bit of the software, but AI adjacent names, crypto, which are working out. But I still have a lot to improve with Vertiv and QXO. If I did not pick QXO and if Vertiv ended up showing off better earnings, I mean, this draft would be a blowout. But yeah, Jason, man, I don't know. I literally don't know half of these positions, but the problem is that during the repicks, he can only swap out 2 of them. So it'll be interesting to see what he removes, or if he keeps the exact same portfolio. I assume he's going to take advantage of his 2 position switches, but yeah. I don't think I'm like for real, Leroy. I don't even know if I'm going to make a change. I think that I'll need to do a lot more work, but Vertiv and QXO could do better. And I still believe in those names. QXO, obviously, you know, stunning position, not great for this current rate environment, but still doing extremely well. I don't even know if I will, like, what would I want? It's not just about swapping out the names you don't want. It's about putting in names that you believe are undervalued. So, I don't know. I don't know if I'd swap anything. Tanner cheated in the draft, confirmed. I love the idea of even cheating, right? Like, how do you, I wish I could cheat in the stock market. Get to see what's going to move before it happens. Be a very rich man. No. You know what? I got a lot of crap for picking names like Visa and Mercado Libre, and everyone told me to swap out those names. Like Visa had moved like 3% the entire year before. And I picked it, and everyone was wondering why I didn't. Now it's up nearly 17%. So, and all I really did, like, it wasn't anything too fancy. I just bought amazing companies. I just thought, hey, I'm going to pick the best companies. Let me pitch a name. Non-point in chat. His name's Steve. He loves himself some Apple. I think he has some other positions as well, but Apple's definitely been one. Okay. It's called buying what's down, folks. I don't think so. Like, I didn't just specifically buy things that were down. I don't really believe in that notion. Companies can always fall further. I don't think that's a reason to. And many of the names that were purchased from the people who were even most read were names that were really down. I don't think it was just that. Let's go ahead and talk about Nvidia, though. There's been a ton of new Nvidia stories that I really want to cover. First off, Nvidia customers were notified that they are going to potentially have to pay as much as 15% more for some of the Grace Blackwell systems and Vera Rubin systems due to surging memory prices. Okay, this put a lot of stress on some of the companies like Nebius and CoreWeave that believe that they have very tight margin situations. So while they're paying a ton in debt and they've got a lot of these high expenses, at least they know how much they're paying for the chips and how much those tokens are going to end up generating. Well, if the prices of the chips end up changing, how much of that economic buffer does that eat into? Let alone the potential for changes in power pricing and all of these things. Anyway, Michael Burry got a sniff of this. He ended up going in and shorting CoreWeave as well. Obviously, he has a large short on Nebius, and he's been doubling down on sort of calling the bluff on the memory names and NeoCloud names. He's pretty much just shorting my entire portfolio. Palantir, Nvidia, he hates everything that I love. But that it doesn't necessarily mean a bad thing for Nvidia. We'll have to see how this ends up going along, but if they can pass these prices on to the consumer and that's not impacting their net margins, we have even a higher potential for more revenue leading into not necessarily higher margins, but sustained margins, right? If the memory prices are increasing and you can pass 15% of that off to customers, you're keeping that strong margin on a lot more revenue. So we'll just have to see if customers can actually put up with these prices. We've not seen any customers come out and say anything too bad about, having to reduce their purchases or rotating to AMD. And that's sort of the thing too. It's not Nvidia increasing these prices in a bubble, right? Those prices are going to be seen at AMD. Those prices are going to be seen at Broadcom because it's memory, and none of those companies supply their own memory. Those memory increasing prices are coming from external customers: Micron, SK Hynix, Samsung, SanDisk. And so those companies are actually the real beneficiaries here. The increasing prices in NAND and DRAM are being realized, and you can see it from the prices of the chip increases from Nvidia. So that is pretty wild. And then there was a couple of other stories that I think is also bothering the markets. Nvidia is in talks to invest in Perplexity in a new $30+ billion valuation. They'll also pay $6 billion to license poolside AI technology and invest another $1 billion into the startup itself. This is to essentially bring in more than 100 different poolside AI employees to Nvidia to help the expansion of the Nemotron models, right? This is an American open source, open weight AI company that now they want to bring in that, the sort of licensing and the technical expertise to Nvidia to then bring up their model performance. Now, Nvidia doesn't actually, at least in my belief, want to be in the model game, okay? They feel like they have to because a lot of these companies like OpenAI and Anthropic have been threatening to build their own custom silicon, move away, do deals with AMD, do deals with Broadcom. They're expanding their architecture. And so Nvidia also wants to essentially show to them, hey, we may not even need you, okay? We can also play your game. The model's the easy thing. Good luck making your own custom silicon at margins that you think are going to be beneficial to you, because Broadcom and all of these companies still charge 70+% margins. Like, it's not necessarily cheap, right? Going to Cerebras, going to all these other businesses, very, very expensive. So essentially, Nvidia wants to play as more than just a chip name. They want to remove themselves as just a hardware company that's very cyclical and move into a territory of, we are an AI platform. This is an entire ecosystem. Our customers not only benefit from the CUDA libraries, but also from amazing open weight, open model, or open source models that they can also customize on their own, work with, and do best on our architecture. So very, very good strategy here from Nvidia. But what I think is the problem is these deals that Nvidia has been making have been progressively getting larger and larger. And I think that this is, let me tell you why this is not true and why this is not a problem, but yet people still have problems with it, is that we've seen Nvidia go from signing these $1 billion deals to $2 billion deals to now signing $4-6 billion deals. Like, they've gotten larger and larger over the years. And people believe that this is just the furthering of the sort of cyclical finance or circular financing and taking on much more risk. But during that period of them going from these essentially $2 to $3 billion deals to the $4 to $6 billion deals, Nvidia's revenue and overall net income has doubled. They are doubling their size of their balance sheet in the profitability, and the free cash flow that they're bringing on is doubling year over year. So the size of the deals doubling as well is only consistent to the overall size of their business. It's not increasing in its overall, size of Nvidia. I mean, it might be on a market cap basis because that company has stayed pretty consistent. But let's talk about that more in a full Nvidia review, which I'm going to do here in a minute. But the valuations have really compressed on Nvidia because earnings have exploded, not that they are just taking on more risk comparatively to their overall revenue, net income, or free cash flow. That's not necessarily true. They ended up showing off two other amazing deals. SpaceX just said that they are now adopting Vera CPUs to accelerate agentic artificial intelligence at massive scale, not just for Grok, but for their other hyperscale customers that they also have, like Anthropic, for example. And then on top of that, they've just recently announced their new Grok LPX is now in full production, and Nebius is the first customer to adopt. Okay, so two major players, Nebius, SpaceX, buying into products of Nvidia that aren't even a part of their forecast. And I'll talk about that here in a second. But let me take a sip of coffee here, and then we are going to jump into my full Nvidia review. As a reminder, this is my largest position. I could be wrong on the numbers that I say. This is not a company that we have the same level of access of channel checks that, you know, Wall Street does by going to the big cloud providers, knocking on their door and saying, hey, how many chips have you been ordering? We do get some indication, and it's really good to know that NVIDIA's quarters are actually a month off from everyone else's. So they actually report from May, June, and July, not the April, May, June that every other quarter reports in. So we actually see a lot of Q2 numbers from the Amazons, the Alphabets, the Metas. But let me go ahead and jump in to my review. I looked over and saw one comment. I think you've drank enough coffee today, Tanner. This is the amount of coffee that I've had today. It's iced coffee, so it's, you know, diluted. I'm just excited. We're talking about my favorite company in the world. PEG ratio on NVIDIA is 0.6. I think that's actually true. It might even get lower, and we'll talk about that. Okay, let's go ahead and talk about NVIDIA's earnings estimates, okay? As a reminder, biggest position, and one of the reasons that I've taken such a large stance on NVIDIA and doubled down on it in 2025 is because of this explosion in artificial intelligence. This has led their growth to not only be in high triple digits, growing at 265% back in January 2024, but now even today, re-accelerating that growth after China revenue ended up falling off their revenue. So China revenue was a part of their outlook, was a part of their overall earnings. They stopped doing that, and then as we're starting to overlap those earnings, the revenue is re-accelerating. This is just purely in customers outside of China, which, by the way, they are the number 2 player in all of artificial intelligence in terms of the purchases, the headcount, the focus in that space. So the fact that we're even re-accelerating without China is pretty wild. Going into Q2, and whenever I started to forecast this, I had to take a look at what NVIDIA had already told us. This is the clearest indication of what they're thinking. $91 billion in revenue, plus or minus 2%, at 75% gross margins, plus or minus 50 basis points, and then operating expenses of around $8.3 billion, which, based on that revenue, is similar to where we saw last quarter. And then we also have a tax base around 16 to 18%. If you take that plus or minus 2% on NVIDIA, you see anywhere between $89 billion to $92.8 billion, leading to year-over-year growth rates of somewhere between 90% to 98.6% based on that guidance range. My current forecast is that they are going to do $93.5 billion, indicating a 100% growth rate. Now, I want to talk through why I believe this. First off, Wall Street indicates that they believe that they're going to be on the high side of that guidance, $92 billion. So on the high side of that guidance that NVIDIA had already given, 97% growth rate year over year. Okay. Each and every quarter since NVIDIA has been in this sort of AI boom, they have constantly beat revenue and EPS expectations. Those revenue and EPS expectations on average, especially near the top here, is roughly about 3%. Okay. That continuous beat every single quarter has led Wall Street to believe, like back in the day, they used to believe that going into 2028, they were going to do somewhere around $35 billion in revenue. Today, they're closer to about $150 billion, right? On the same quarter, but every single quarter, those 3% beats constantly tackle up, and the revenue expectations for further quarters ends up getting brought up with it. Okay, same thing for EPS. Similar quarters that expected us to do 30 to 50 cents are now expecting us to do anywhere in the range of $2.25 to $3.50. The exact same quarters. So those continuous 3% beats, 5% beats is what leads to revisions even higher. I'm assuming a regular 3% revenue surprise here, which would be just above Nvidia's $91 billion, or about 4.2% higher than their midpoint in their range. That would lead to 102%. And by the way, there's a lot of analysts that actually have numbers even above this, much closer to 96 billion. But I think that this could be where Nvidia actually comes in at, based on the continuous surprises each and every quarter. I'm not even guiding for that. I'm guiding for 93.5 billion. So about a little over $1 billion less. One of the reasons that I believe this is because of that heightened CapEx that we've ended up seeing, right? Last quarter, just in these sort of 7 names, which even Nebius in there is very small name, and there's other private companies that are doing just as large. Mind you, this doesn't even include SpaceX. This doesn't include Nscale or many other businesses that are doing huge amounts of capital expenditures, very focused on Nvidia hardware, okay? That has led us to $600 billion in the last 12 months for CapEx in these 7 names alone, no SpaceX. If you end up taking a look at the change that we've seen from all of these quarters, because we already have their Q2 numbers, what we ended up seeing for Alphabet, they increased their CapEx by $15 billion. Amazon brought up theirs by $20 billion. Microsoft increased their CapEx. We ended up seeing Meta increase theirs on the bottom end of CapEx. Nebius kept their very, very high, 20 to 25 billion, very consistent. CoreWeave ended up increasing theirs, and so did Oracle. So Q2 came in year over year, or sorry, not even year over year, but for the full year of 2026, quarter over quarter, increasing all of their CapExes. That is pointing to massive amounts just in these names, not including SpaceX, that we are looking at 2026 CapEx. Initial outlooks were 660 billion. This was from a year ago. Last quarter, 710 billion, and not including the change in Microsoft's lease reclassification would be roughly about $748 billion of capital expenditures. So constant increases in their overall spend. Okay. If we look back, as a reminder, $91 billion, not including China revenue. But we may have seen China revenue. Back in July 14th, which gives us a few weeks for fiscal year Q2 2027. Now, as a reminder, because some people get confused, that is this quarter. They talk about 2027, but it's their fiscal year, not the actual year. That we did actually say that shipments of H200s have began. Now you would say, okay, but payment doesn't come in necessarily right away, but the new China deals that Nvidia has come up with have been reported to say that we are not doing any payment plans. That if you are to purchase chips from Nvidia, that they have to be in full, like you have to pay in full before you end up getting the chips. So some of this revenue, very, very small amounts, may have come in Q2. However, we're seeing larger reports now saying that China is now easing their limits as well. ByteDance and Tencent now able to order tens of thousands of H200s that are expecting shipments in Q3. So way more there in terms of forecast going forward. But Q2, only a very, very small amount. So I'm not necessarily including that in my guidance, but it is something to consider. On top of that, whenever it comes to net income, and we have to look at this from an adjusted net income base, and then I'll talk about why, but it has to do with their non-operating income, which is really money that's made on some of the investments that they've made. Not only have they guaranteed orders from CoreWeave and Nebius through large investments, $2 billion deals with those businesses, but on top of that, those companies have actually appreciated over time. So they're winning in 2 different ways. But this has led their adjusted EPS, excluding those mark-to-market gains, of roughly $1.87, constantly increasing over this period. And going out to next quarter, Wall Street is roughly anticipating about $2.09. Okay. This is really bringing in $50 billion, $50.5 billion at a 54% margin. net income margin. A decrease in their margin, even though that's not what Nvidia said that they were going to guide for. They also said 55%. So that's also how I'm predicting it. I'm assuming a 55% margin on that $93.5 billion worth of growth, bringing them up to put up $52 billion of adjusted net income. This is my guidance for the company. Okay. That's what I expect that they're going to do, not a decrease in that margin, because we haven't seen a reason for them to do so. That would lead to about $2.16 of EPS for my Q2 guidance for Nvidia, but that is adjusted. Let's talk about their actual GAAP earnings now, which showed off last quarter at a 71% margin, not a 55% margin, a 71% margin, and actually showed off $58 billion. I'll show you why. They marked nearly $16 billion of mark-to-market gains based on some of the investments that they've made in their books. And we'll show some of those off. $13.4 billion of those were from gains on public equities. Nebius, Intel, CoreWeave, those sort of names. $2.6 billion came from non-marketable or private equities. So names like Nscale, SpaceX, that sort of thing. This was before. Since those quarters, between Q1 and Q2, although they have seen significant gains in their overall portfolio, and we're going to highlight that here in a second, those names, like Intel, have gone from $99 at the end of Q1. This is not the regular Q1. This is Nvidia's fiscal Q1. So from, what was it, April 31st to July 31st. These names have, for the most part, decreased during those periods. So we've actually seen a drawdown in their overall portfolio from $44 billion at the end of Q1 to roughly about $38 billion, or a loss of $5.4 billion. So maybe a potential that we're not going to see those mark-to-market gains like we did last quarter of $16 billion plus, because we really haven't seen that. However, they did recently announce in their holdings public portfolio that they now have a $21 billion SpaceX holding in Q2, because they had to report their 13F on the regular Q2 time, which is from April, May, June, even though they report on a May, June, July period. Okay? So that ends up showing off a $21 billion gain. However, there's reports that they ended up putting in $10 billion in order to end up see this return. So it might not all be gains. I'm assuming a $10 billion mark-to-market gain on their investments based on timing of some of these investments. Some of these companies have been trimmed, okay? On top of that, SpaceX ended up showing off about a $12 billion gain from the last time. Nscale, OpenAI, Anthropic, some of these companies have had increased rounds in Q2. And then, so those are some of the private equity names. I'm just putting it at sort of an average $10 billion. So my assumed total GAAP net income number right now is at about $62 billion, or a net income margin of about 65%, almost 66%. This is my assumption. That also assumes, on a GAAP basis, that Nvidia is going to be putting up a $2.57 EPS, which I've also guided for a tax rate of 18%. So the tax rate that they assumed at the beginning of the year was between 16 to 18%. Many quarters before that, they've actually come in much lower than what they've said. I'm assuming the highest part of that range. So this would assume a little bit of conservatism in this number. This is way, way higher than what Wall Street has it at about $2.09. Okay. Now, the reason why I think that this is the valuation that I believe, or the numbers that I believe is going to lead Nvidia even higher, is because the valuation that's in this company. Not only are they going to take a lot of the free cash flow, net income that they've already procured in this last quarter and put that into buybacks and put that into dividends, which they've shown a very, very large increase in their dividend, 25x last quarter. They've also added an additional $80 billion of share repurchase authorization into the quarter. And my belief is if they continue to grow at this sort of 80 to 100% growth rate, that those $80 billion of share authorizations are going to become $160 billion the year after if they can continue to keep up this rate. So knowing the amount of outstanding shares of the company, very important. But On the valuation, this is really important for Nvidia as well. Well, the market cap has continuously increased all the way from January of 2024 till now. The valuation in terms of their earnings has decreased because the company is not appreciating as fast as their earnings are. So the PE ratio is at some of the lowest levels that we've ever seen it at, sitting at around roughly 32 times as of today, and a forward PE ratio of roughly 21 times, a little bit under that. As we look forward, we see that was forward 21 times. As we look to free cash flow, 42 times on a trailing free cash flow base, and then 21 times on a forward free cash flow base, meaning Wall Street's still expecting them to keep extremely high free cash flow margins and actually improving over time. Okay. The one thing that I think is quite wild, whenever you look at the other big tech names that companies are putting Nvidia into and sort of the comparables, the growth rates are not even remotely the same. And yes, this is cyclical. Yes, there are a lot of these companies that might have more sustained earnings than Nvidia, but during this while the rope is completely tight on the supply constraint, this growth rate and the high margins that they end up seeing, which, mind you, in Google's, they put up a 93% net profit margin. Clearly, that's not true. It was actually much closer to 30%, but they ended up posting nearly $100 billion of gains due to SpaceX and Anthropic holdings that they have that ended up spiking up their net income margins. Same thing for Nvidia. Their margin is actually closer to about 55%, but even on a or sort of adjusted net income margin basis, Nvidia would still be by far the highest across this entire board. And the reason why you don't see any mark here is because we haven't seen their Q2 numbers just yet. Okay. Very important to realize that. But whenever you go ahead and you look at the forward PEs of these businesses, right, based on the margin that you end up seeing, based on the overall growth, you see Nvidia near the absolute bottom. 21 times puts them closer to, Meta in terms of its valuation than where even an Amazon or an Apple or even a Google would be at on that forward PE basis. 26 times, 28 times, 34 times for companies that are growing at 1/6 the rate as Nvidia at much, much lower margins. So the pricing here on Nvidia, I think, is super disconnected from where we actually should be. Then comes in the actual cash generation, right? Free cash flow is the ultimate metric. This is how much cash companies are generating. And while a lot of these businesses have been really lowering their free cash flow generation to afford the next chips, the real beneficiary here is Nvidia. They're the ones taking in all that cash, and they're keeping it because they don't have to set up fabrications. They're purely just a software designer. They build the blueprints and send them off to TSMC in order to take all that risk in the build out and all of these things. So the free cash flow margin stays extremely high, some of the highest rates that we've seen over the period that we're looking here, roughly about 2 years, and is likely to even continue to post high free cash flow margins as long as this build out remains strong, which is exactly what Nvidia and Wall Street is guiding towards. Based on the amount of revenue that I'm believing Nvidia is going to post and their free cash flow that I believe they're going to post, Nvidia is actually going to break a world record next, come this Wednesday, for the most free cash flow ever generated in a single quarter, beating out on Apple's previous record of roughly about $50+ billion. I think it was $52 billion. But by a long shot, Nvidia is going to surpass that and likely continue to beat their own records in the companies going forward. Now, looking ahead is extremely important to companies that have these tight constraints, like that rope that I'm talking about. Whenever they talk about things like working on potentially seeing a $1 trillion forecast between 2025 to 2027 on Blackwell and Rubin architecture. This is extremely important, this wording, because Jensen Huang had come out and corrected his statement and said, just to be very clear, what he's talking about is Blackwell architecture and Rubin architecture, okay? Meaning Blackwell Ultra, and Rubin, not Rubin Ultra. Those three systems alone. What we've then ended up seeing is that they've entered into the Vera CPU market, roughly a $200 billion new total addressable market for NVIDIA, not included in that $1 trillion forecast for Nvidia previously. This is all brand new money. They said we have visibility to near $20 billion in total CPU revenue this year, setting us up to become the world leader in CPU supply. Okay, so they are going to add in an additional $20 billion of potential new visible revenue that was not included in the $1 trillion outlook. On top of that, they now have just said that SpaceX is now deploying NVIDIA Vera CPU systems. SpaceX came out and recently said that they are exclusive to NVIDIA. So that's going to be for all of their GPUs, CPUs, and LPX systems, or their inference chips, which NVIDIA just announced today that they are in full production of their LPX system. And also, Nebius was the first company to take, adoption of those chips. So we're already selling 2 new systems, Vera CPUs and Grok LPX systems, that are not included in that $1 trillion forecast that Jensen had given us for 2027. He said, analysts are now forecasting hyperscale CapEx to exceed $1 trillion in 2027. Mind you, there are some analyst forecasts as high as 1.4 trillion. And agentic AI beginning to proliferate all industries, AI infrastructure spend is on track to reach $3 to $4 trillion annually by the end of this decade. So from 2026 to 2026 to 2030, they believe CapEx is going to exceed 1 trillion in 2027, and then 3 years from now, 3 to 4x that amount. Pretty wild. And then he said on an annualized basis. So this is why I remain an extremely, extremely bullish person in terms of my overall holding of NVIDIA. It's why I continue to be way, way overweight in this position, over 50% of my portfolio. But just as a recap on the numbers that I talked about for this quarter specifically, I'm expecting $93.5 billion, a growth rate of over 100%. And I think that, and I've showed reasons to believe that this is quite conservative. Net income on a GAAP basis of roughly 62.4, nearly $62.5 billion, 66% margin, based on a mark-to-market gain and keeping up a 55% margin, showing off EPS of $2.57. If they don't end up showing off those mark-to-market gains of 10 billion, I believe that EPS on an adjusted basis will be $2.16, still much higher than Wall Street estimates. Wall Street and NVIDIA have it somewhere coming in revenue, $91 to $92 billion, and EPS coming in somewhere around $2.09. That is my recap going into NVIDIA earnings on Wednesday. I couldn't be happier. I believe that the build out is going to happen. And while the stock doesn't necessarily have to appreciate on the news that we've seen today, there is constant reports, whether it's, Elon Musk that just announced, as you can see here, this literally just happened a few minutes ago. SpaceX, in partnership with Nvidia, has designed a space-optimized Vera Rubin NVL-72 system for launch to orbit in Q4 of next year with significant scale in 2028. So the story is not slowing down here. Every single way that you look, it's either companies that have adopted NVIDIA systems, taken payment from NVIDIA to buy shares from those companies, which a lot of people talk about circular financing, but they're not talking about the fact that NVIDIA has also benefited from those positions, going from, $13 billion that they've allocated to public positions that are now worth over $44 billion. And then on top of that, so not only has that contributed to their net income that they've been posting, which is very much real because they've sold some of those positions like Lumentum and Coherent. Some of those positions they no longer hold, but they did make huge gains on those positions that have also allowed them to get closer relationships with those companies to then secure supply of photonics, secure supply of memory, secure supply of customers like CoreWeave, Nebius, SpaceX. And those customers put in a lot more than the billions of dollars that SpaceX has, or that NVIDIA has allocated to them, not only to buy companies that are also doing very well. But I'm curious your guys' take on NVIDIA. Are we going to run in the stock come Wednesday night? What's your price target? Well, I have a long-term price target. I think that the company will be a $10 trillion business. What will it be come Wednesday night? I've got no clue. I'm not writing short-term options. That's not the way I'm looking to benefit off the company. I believe that the company is going to be a $10 trillion business in likely the next 3 or 4 years, something like this. If that ends up coming true, the position, even at this size and scale, will continuously outperform the S&P 500. Not to mention, I've been a shareholder since 2018. So it'll be one of the greatest investments I could have ever have made, let alone be by far the greatest position in my portfolio in terms of sheer gain. So, mind you, that's never been, the whole time that I've held that position, I've never done price targets. I know people want it because like they look to like analysts giving price targets, but that's not what I do. No, always tanks despite beating earnings. I disagree. I think people are looking too much on the Wednesday number and not worried about what happens in the months between. So, and also the buybacks, the dividends, all of these things actually allow for larger pumps whenever the company does fall below 20 times forward PE. If it doesn't end up appreciating on the numbers that I believe are going to be posted here, like think about what happens to the forward PE. Do we get a forward PE of 15 times? Do we get a forward PE of 10 times? Like how low can we truly bring this company down if it stays at the price for the next 3 to 4 quarters on a business that's growing at 80 to 100%? How long can you keep a name down that is performing at the rate that it is? And then, because bond yields are rising, the amount of companies that you can actually find that are outperforming in terms of their ability to generate income to investors has just fallen off a cliff. And you can take a look at this really quick. I thought this was a pretty good report. Let me actually make it a little bit bigger here. But this shows off the amount of S&P 500 companies with dividend yields that are larger than the 10-year Treasury yield. And we are at bottomed out rates right now. The lowest point since 2008, okay? Which is a pretty stark year to be comparing that to. If Nvidia in the build out is allowing them to then generate what turned out to be a shareholder yield today of like 0.5%, but they ended up 25xing that. If they end up 4xing that again, we're looking at a potential shareholder yield of roughly 2%. It's not beating the Treasury yield, but it's also coupled with 100% growth rates in terms of the overall revenue. And there's going to be an amount of investors that see some sort of appreciation in the actual asset pricing, right? So as they bring up their buybacks, as they do these dividends, it allows for new types of investors, new potential asset managers who do want a dividend growth company, also wants to be a part of the AI build out and can, based on the objectives of the fund that they have, still be able to acquire Nvidia shares, even though potentially the next biggest holding in their portfolio is, Altria Group or something like this. Like those, the cheaper you allow Nvidia to be on their stock price, the more that they can essentially affect their stock price just based on buybacks and dividends. That is my margin of safety. Did you guys forget that the stock price is already 10x'd? LOL. No, I've not forgotten that it's already 10x. But what happens whenever a company ends up like, I think there's this fallacy in like retail investing sometimes. Not everyone has it. There's smart investors, but Dave might not be one of them. And they believe that there's like this basis, and then stocks have to bounce from the bottom and then to the top, and then they go back to the bottom, and then they go back to the top. And you want to sell it whenever it goes down to the bottom, and you want to buy it when it hits the bottom, and you want to sell it when it goes to the top. However, there's earnings on those companies, and the multiples actually allow companies to be extremely low valuations, even though the stock is up. So like I showed in that report, let me go ahead and bring up the PE ratio for Nvidia here. This is both forward and, the trailing price to earnings ratio for Nvidia. Where is the 10x here in the stock price? I'd like to know, because what we're actually seeing is one of the cheapest valuations that we've seen in Nvidia in its entire history, or at least in the near history here. I'm only looking at a couple of years. But during this build out, show me where the 10x has led to an expensive business at a forward price to earnings ratio of 21 times. And then those same people who are new to the markets can look to companies like Meta and say, well, this is the cheap company that you want to be buying. Or like they'll point to extremely seasoned companies and say, this company has gotten really cheap. And it's like, well, zoom out on Meta, man. This has been one of the, hey, are you late to Meta? Of course you are. There's investors who could have bought in at $17 a share. You're buying in at $5.50. But there's a lot of earnings between $17 back in 2013 and where you're buying in today in 2026. So earnings tell a big picture, and a 10x can be very expensive. Yeah. Okay. Let's see here. Is Besant live yet? Besant was live already. I don't know if he's expected to go back live, but he did already talk about Operation, what was it? Forecast? Operation Outcast? I think it was Outcast. They're essentially going to be, sanctioning the IRGC. Besant, not Besant, whatever, If that stops, it tanks hard, in my opinion. Of course, but you can say that about any business. If people stop showing up to Facebook, that tanks hard. It's what's the likelihood? This is why I don't like the bear arguments too much. It's like there's been a bunch of bear arguments that come on and they say, yeah, but when the AI spending stops, Nvidia will collapse. Like, I completely get that. Of course. Point me to a reason why it would slow down. Point me to an indication that it has even started to slow down. I've not seen it yet. And when I do, I'll take the necessary measures in order to try to reduce my holding on Nvidia. But I mean, until then, I think a lot of people worry about a 30% decline in a stock and then they end up missing the 2x. So scared money doesn't make money. I can point to every single company in the market and point out their bear case. What if Microsoft rebuilds Palantir? Yeah, but it's not going to happen. So what do you want me to do? Okay. I think D-Local wants to go higher. I've not seen where it was after earnings. 15.20, not bad. Not bad. I do want to... there's been a lot of companies that I did a lot of work on over the weekend. So obviously, looking at all my numbers on Nvidia, I retook a look at Nubank. I retook a look at Bending Spoons. However, I'm not going to be talking about that name as much because I realized that most people, you guys can't even purchase it because there is a tax situation with buying Italian companies. Robinhood doesn't have a system that handles those tax payments. So you're not allowed to purchase Bending Spoons on Robinhood just yet. I guess there's not been previously extremely large Italian companies. I don't know where Ferrari or some of those businesses are based out of, but hey, anyway, Bending Spoons is not available on Robinhood. So I'm not going to talk about that company as much. However, I have done a lot of work on it. If other people can't, make trades with it, then it's pointless. Matt says, Nvidia and Jensen are frauds, inflating sales by sending chips to China. Your silence makes you complicit. You're such a weirdo, dude. This is literally the guy, like, I'm not joking. It's the same dude who says, like, he full ports SMCI. Literally caught for fraud. Like truly caught for fraud. Let alone Nvidia gets probed all the time based on the customer deals that they end up having. Nothing ends up getting found. So, yeah. And by the way, I think chip sales should be sold to China. And I'm a Canadian citizen. So what? My silence makes me complicit. One, I don't believe it's happening. Two, I believe it should be happening because I don't think it's the chips that are making the difference. And then also, you're a super hypocrite because you're full porting the number one name that's like actually a criminal organization. You weirdo. That's not Matt Money. That's some random guy. Okay. Tanner, Nvidia is price perfection at 20 times price to sales. But what is a price to sales versus a price to earnings? If you compare a price to sales of a company that has like a really, really low price, like a Open Door or something like this, you could be like, wow, this company is so cheap. They've got a price to sales that's bottomed out. What's the price to sales on a Walmart? Let's go check. And then I'm sure you already know what I'm saying. Yeah, but Tanner, it's different. They have really low margin business. Yeah, price to sales on Walmart 1.1 times. Why is that? Why don't they have a higher price to sales? Because they don't make any damn money on that revenue. Their margins are bottomed out. But if you're putting up a 55% margin, you're going to have a high price to sales. So I think price to sales is the metric before the metric. That's like, hey, how does this compare against other business? You should compare price to sales versus AMD and Nvidia or Broadcom Nvidia. That's a metric that should be looked at whenever comparing similar industries or similar companies in the same sector. But in terms of it as a standalone margin and say this company is expensive versus the broad S&P 500 takes away from the fact that they are one of the most cash generative, highest earning business in the entire world. As Humble Yours says, price to sales is a good way of ignoring the margin. Can't ignore the margin. Okay. I don't think I'm going, obviously there is rage bait comments, but I also think that they're comments that maybe some people have. I've heard that price to sales thing a few times. It just allows me a time to address that comment. I'm not even kicking those people. Matt's been in the chat forever. He's still welcome. But he says dumb comments. I'm going to call it out. Not Matt Money, by the way. Matt Money's the best. Not a weirdo. Okay. What's up with quantum today? I don't know anything about quantum. Bitmine. I got to put together the numbers for Bitmine. I want to see how much Ethereum. I obviously took a look very quickly, but it seems like they're back above 1 times MNAV, and they're back to acquiring. They're back to acquiring Ethereum. So, if this is the time where the ramp for Ethereum really starts to happen, and we go from up 30% this week, and then as Tom Lee had shown it off in the year after, it goes up about on average 170% after a week like we saw this time. That shows similar pattern consistencies to May of 2025 and July of 2021. Maybe this is the crypto breakout that we've been waiting for. I'm not necessarily doubling down just yet on that. I've got my fair share of crypto names, not just in BMNR or anything like this, but like in Robinhood, in SoFi, you know, across the fintech landscape that I have positions in. Even Nubank, for example, has crypto customers. I feel diversified enough or exposed enough to crypto, while also holding on to ETH and Bitcoin and all those things for a run. But I'm also I'm not betting, like I'm not banking on those things to end up happening, but I'm also not ignorant to the fact that crypto can absolutely rip higher. It's happened constantly before. And I think some people get caught in that sort of hot hand fallacy of cryptocurrency, where because it's been sinking for so long over the past like roughly year, that they believe that it can no longer go up. Like these assets are dead. But what's actually funny is the amount of people who have remained, you know, unselling. They don't like, they are holding for the extremely long term. So crypto actually can run because there's very, very few sellers right now. The people who are just buying in right now are not selling for 10, 15% gains. They want to see the comeback. And the base that has allowed Ethereum to not fall below 2,000 for the most part, those are holders, long-term holders. So, yeah. Okay. I'm a proud BMNR bag holder, says FLTR. Yeah, that's funny. Have you ever looked into Celestica or Kraken Robotics? Not well enough to say like I have a deep understanding. I've definitely taken a look at those companies. Those names have passed up or come up enough, but I've not taken deep looks at any of them. Okay, what is not working, by the way? HIMS is down another 9%. This name can't seem to catch a break. HIMS down 9%, AOI down 11.3%, ASTS down 7.9%. Pretty wild. What also caused HIMS to have this huge sell-off? Was there some news over the weekend? Okay. Boost run down 7.7. Yeah, some of these neo clouds, I'm sure, are taking hits because of the increasing prices of Nvidia GPUs. Even though the reason for the GPU price increases is because of memory, and yet the memory names are also selling off. Ondas down 4.8%. SMCI down 4.4%. Pretty wild. S&P, however, coming back. Not in part really due to Nvidia. They're still down 2.2%, 2.1%, $210 a share. Tesla is also down roughly about 2.6%. All other Mag 7s are green, leading the charge. Meta right now, 559, up 1.8%. Okay. HIMS is kind of a ripoff. Yeah, but what's happening in the thing? Also, why is Meta just having a nice green day today? Okay. Kevin Wu ended up tweeting out about an hour ago. Can someone please explain, like I'm 5, why every single thing that happened over this weekend was bullish and my stocks are still red? I mean, that's pretty true, right? It's pretty wild how good all of the Nvidia stories were, and then how the stock is still red today. I think the investment in Poolside, I think the investment in Perplexity, I think all of these stories were extremely bullish, and yet it's still down. Okay. Thoughts on semi-analysis NeoCloud rankings? Wait, did that come out? I did not see that yet. How did I not see that? Oh, it's still coming out. We are currently retesting all providers for ClusterMax 3.0 with expanded benchmarks and analysis. I'm pretty sure is expected for August, but we're running out of days here. Okay. ClusterMax 3 with a deadline of August 1st. Okay, well, that didn't happen. Yeah, BE is up 4.1%. Pelosi ended up announcing that she has a position, or her husband has a position of Bloom Energy. That was quite exciting. Okay, let's continue on here with some of the other stories that ended up happening. So where's gold, by the way? Let's just check a quick gold index or ETF here. I think this is 1/10 an ounce, but up 0.5% today. Silver not seeing as big of a recovery, $62 an ounce. This was a crazy story that I actually wanted to highlight. A couple different things. One was companies that have started to report showing guidance raises. So there's two different ones here. One is about how much they beat based on the earnings that we've already seen. So Q2 earnings. 92% of S&P 500 companies have reported. 87% of them beat EPS estimates. 76% have beaten revenue estimates. Funny enough, out of that 87%, almost every single one beat on EPS estimates because they had SpaceX allocation. I'm kidding, but also not 100% a joke. There was a lot of companies with SpaceX allocations. Pretty wild, actually. And then on top of that, the guidances that have been happening for the full year have really changed. So of the 252 companies providing a guidance direction, 173 of them ended up raising, 59 maintained, and 20 ended up cutting their guidance. Pretty wild. So a large beat. Full year EPS was 38% above the street, which is also quite exciting. Next quarter EPS, 43% above. Next quarter revenue was 57% above. That is wild. So really nice guidance beats across the S&P 500. Wild. Okay. Also a good sign for Nvidia too. But like I said, Treasury's also offering way more income than almost every single S&P 500 stock. Earnings increasing? Yeah, bearish. Calling the IRGC a terrorist organization was crazy work. It's actively considered a terrorist organization from most governments, at least from the United States government and the Canadian government. They are actually labeled as a terrorist organization. But like I said, that's completely different than how the Iranian people, like it's completely different. SLV 60 or 62, but spot is 69. Oh, well, I guess it's maybe decoupling right now. Like, dude, the chat's wild, eh? I've got people in here defending the IRGC. Like, okay, you know what? Might be time for a few bans. I'm a pretty open guy, but that's pretty wild. Okay, we also ended up seeing a video on CNBC from was it Shelley Lee? I think she is the Sprout CEO. That is essentially a company that looks to take in GPU waste and refurbish old GPUs. But she gives some pretty good insight into the types of chips that are being potentially passed down, depreciated to a point where they can no longer use them, so they want to sell it for pennies on the dollar. What chips are those? Are those Hoppers? Are those Amperes? Are those only consumer GPUs? These sort of comments I thought were very helpful from somebody that deals on the side of the depreciation side, which is like Michael Burry's whole thesis. Maybe the Sprout CEO can give us some.
Our next guest is here to talk about financing in the AI world as well. This is all happening as chip makers rush to innovate and churn out newer, faster chips for hyperscalers. Older GPUs remain in circulation throughout that. Nvidia's $500 billion financing plan depends in part on the company's chips retaining their value, since Jensen Huang has offered the hardware as collateral. Joining us right now with more on the residual value of GPUs is Shelley Lee. She is co-founder and CEO of Sprout. Sprout refurbishes, recycles, and retires IT hardware for enterprise companies. And Shelley, thanks for being here today.
Thanks for having me.
All right, I want to talk more about your company, and then we'll get into the value you see in GPUs, because you've got a pretty unique perspective on all of this. Sprout is a company that you started 12 years ago in your dorm room at Duke. Tell us about the genesis. What happened?
Yeah, we realized that there were just so many at the time in 2014, students and professors moving out of campus. And we realized that there was a huge boom of electronic waste happening throughout the industry. And there really wasn't a scaled, unified platform on which electronics could be recycled. So we really started in the consumer space, working on student laptops and teacher desktop systems. What we really moved into after Google and all of the other hyperscalers moved into public cloud was, wow, what is actually going on in all of these data centers way before AI? And how do we responsibly fix, maintain, redeploy, and then finally dispose and remarket of the equipment when that hyperscaler says, I'm done with it?
So you've been doing that with the data centers for a while. I know you've got Apple, Nvidia, Microsoft, Dell, Google as some of your customers who do this. You got in this, I think, in part because of your dad's background, too.
Yep, that's right. In the scrap metal refining business, you learn a lot about the makeup of commodities and how that becomes ultimately what are the most powerful technology hardware today.
So what are you seeing at this point? Because now Wall Street is looking at this and saying, hey, we're going to treat these GPUs as an asset class that we can back with financing. That is highly dependent on how valuable these things are and how long their lifespan is, over how many years. What do you see right now in the front lines in terms of how long these chips last?
Yeah, most years what we do is really boring. We buy GPU racks when they become end of life from the hyperscaler. We fix them up to make sure that they're lovingly refurbished, kind of like an old car. And then we get them ready for the next buyer who doesn't need the latest and greatest, but certainly wants to dip their toe into AI. So maybe they're not running frontier models, but certainly they need the server to pull requests and do a lot of the lower level work that needs to be done and can be done on a 4, 5, 6-year-old server. So what we're seeing now is actually the largest wave of assets coming into the Sprout docks are actually 2020 Ampere generation A100 servers. I think that's a really big shock from the debate. Do these servers last 3 years? Do these last 6 years? The reality for us is the hyperscalers are not letting them go until about 6 years.
So 6 years is the lifespan right now. And then what happens to them? Do they go to zero? Or when you're refurbishing, how much value goes back to the hyperscaler?
Yeah, the big debate on financing is it the total economic life of the product, which Amazon and Meta are saying between 5 and 6 years. But I think what a lot of the people who are looking at this debate are missing is what is the residual value on a 6-year-old server after you actually take it out of the data center? So just to give you an idea, we've processed roughly 46,000 systems to date of GPU hardware. Of that, about 13,000 of it is actually AI hardware. So that's Volta, Ampere, Hopper, Grace Hopper, and Blackwell. What we're seeing on Hoppers today, at 3.5 years after the first ones were installed, is that they're actually retaining about 60 to 70% of their value today. It's a very, very high number.
How much of that, though, do you think is a function of a shortage of new chips? So we were talking actually, I think last week, about the whole idea of thinking of this in the context of cars. So, during COVID, for example, when it was hard to get new cars, the value of used cars actually not only held their value, in some cases went up extraordinarily. The moment that new cars became available, for example, Carvana, which was selling used cars, lost some of its value. And whether that is a sort of applicable mental model for what's happening in the chip space, or you think something different is happening?
Yes, it's very much a supply-demand issue. We talk about this at Sprout all the time, where there has to be tension in the rope for prices to actually maintain the right pricing. So yes, there is an extreme shortage of actually GPUs coming out of Nvidia and all of these very large chip makers. But at the same time, there is a tremendous amount of demand, not only at the frontier, but at inference. So some of these lower end models to really, really ramp up demand in order to support consumption. So I think that it's a function of not only a lot of supply being not available at this time, but a tremendous amount of demand that we're seeing.
What do you think happens in a couple of years from now, assuming that we actually get to a place where the run rate on new chips and is, actually meeting the demand? What that does to the value of the older chips, and whether, when we think about it as an asset class, if that's the new sort of phrase, whether that makes sense in that context?
I don't think about it in 2-year terms or even 5-year terms, because the biggest constraint on silicon is actually not the ability to churn them out of the factory fast enough. It's actually constrained on the user side from these hyperscalers saying, man, we need gigawatts and gigawatts of power in order to support the new servers. And quite frankly, that is a 10, 20, even 30-year problem.
So power is the biggest constraint?
Power is the biggest constraint. Now, I'll tell you something that is a negative as far as the ability of these chips to maintain value. And that is that, truly, I think the debate is quite over, that 2 to 3 years is the life cycle of a chip. It certainly lasts for longer than this. One of the things that these big chip makers didn't intend for is making a chip that lasts 6, 7, 8, 9 years. And so what we're seeing now is, these GPUs are made really, really well, but they're sitting in data centers that just absolutely run them to the ground. And so I might be holding a $20,000 H100 chip, but you know what? If there's a $150 component on there that actually can't be found anymore because it was retired 6 years ago, well, that $20,000 chip is not advanced hardware, it's scrap metal. And so what's really, really concerning is, well, there is demand for this product and there is very limited supply of both chips and power. But in the future, are we actually going to be able to maintain these systems for the longest life cycle that they were intended to be?
As you know by now.
Okay. Okay, there was. I was like, where is that CNBC tab? I couldn't find it. Yeah, so that Sprout CEO, I think that she highlighted some very good things, specifically talking from her business standpoint about how long that these chips are lasting. Like, I'm really struggling to find any of these bear cases where it would be almost in her best interest to highlight how good her business is in terms of saying these chips are depreciating. We're able to pick up the scraps. It's in our benefit that they only last, a certain amount of years before customers are handing them over to us. But no, because they're lasting longer, that's actually, companies are keeping them for much longer. Nvidia is very happy because their customers are happy. They're willing to pay a 15% increase in prices due to memory demand. It's quite nice. Okay. Let's see here. Also, guys, this is separate, but I'm just sort of thinking about this. The stock combine is quite interesting, or the stock draft. I'm having a lot of fun with it, but I can't rotate out of certain positions. And I also think that people don't care enough, even though they are real picks and being tracked by the actual performance. People don't care because there's not a certain amount of money behind it. I'm curious. I have my own portfolio, and I want to keep some privacy there in terms of what my account is worth and these sort of things. But if we were to start a public portfolio, is that something that you guys would be interested in? Like we do similarly to a Joseph Carlson-esque update on not only the stocks that we have, but the performance of it, how we're rotating it, how we're actually working it. I think that's one thing that I'm really missing here is actually showing. The only problem is I'm not a trader at all. Okay. And so, but neither is Joseph. But I'm absolutely not for the most part, I'm not doing anything with my portfolio on a day-to-day basis. So I feel like it would just sort of stay there. So either we, I don't know. I'm thinking maybe we start that on January next year or something. Like very fresh start, January 1st. And I don't know. I'll fund it with 100K or something. And then we just start on a fresh portfolio. The only thing is I want to take tax out of the equation because obviously I'm in Canada here. Very, very different situation from America. So there's a lot of things that I have unanswered questions about, and I don't want to paper trade it. I want it to be real money. I just think the stakes is better for the content. So, I don't know. I think that would be a lot of fun. Do you ever talk with TJ the Wheel Deal? Yeah, but I don't know. Or not I don't know. No, I love TJ. It's just I don't know if I'll be wheeling that portfolio is more what I wanted to say. That came out like I don't like TJ. I love TJ. But I'm not. I think the reason why you said that is what should you do with your portfolio while you're waiting? And I don't know if I'm going to be wheeling that portfolio. Okay. I didn't say a small 100K portfolio. You're putting words in my mouth. I said that I would fund it with 100K. I'm not making that out to be a small portfolio. I just, I don't want to fund it with $1,000 or something like this and then people to not take seriously the money that's behind it. I think the reason why I would put 100K behind it is because that's very serious for anyone. So yeah. It's just a matter of how do I don't know. I got to think about how to do it. So I'm going to give myself a little bit of time. And I'm sure that we will get a bunch of suggestions and ideas. We've had a couple of really cool ideas for, your guys's portfolio. Like we had a community-driven portfolio, which I think got too messy because there was individual investors that could just throw $1,000 at that and then sort of take over with sort of crap names in it. But yeah. Would it be 100K CAD though? No, I'd have to, I don't even have CAD. Like, I only have US dollars. I make US dollars. I, sell products in US dollars. I invest in US dollars. How is Apple doing that portfolio? Apple's doing good. You're doing great. Even Tanner knows CAD isn't real. I mean, yeah, it's play money versus United States. You know what's crazy is like how much US dollars were printed during COVID. And a bunch of Americans got really mad at that, of course, even though we don't know what the opposite would look like if we didn't do that. But still, you have 40, 50 plus % of outstanding shares going. I love you guys, but you spam the chat. It's the fastest way to get kicked out of the chat. So what's it called? Even though the United States printed a ton of money during COVID, the US CAD relationship, Canadian dollar relationship, still even got worse. Like Canada did even worse during that moment against a dollar that was printing into infinity. So there's no, like, I think holding on to Canadian dollars over the last 10 years has just been absolute suicide for your earnings. You're shooting yourself in the foot. And back in the day, that used to be really hard to transfer money from US to Canadian. And now, you have places like Wealthsimple, where you don't even have to utilize specific strategies in order to use two different ETFs and then, rotate money from one to another without having to get hit by exchange rates and everything. You're only moving it in spot. Now, if you just transfer in Wealthsimple at, I think it's like 25K or something like this. If you transfer 25,000 at a time, there's no exchange rate. They just like having, customers that are utilizing the platform. So they'll just exchange it in spot. So it's really, really easy to go between US dollars and Canadian dollars. Yeah. There, of course, there's an exchange rate. I'm not getting 1 for 1, but I'm not getting a like a fee. Isn't Canadian money made out of Teflon or something? You can't rip it. I've never really tried to rip it. Do you guys want to see me? It's like plastic money. It's really weird. Here, give me one second. Okay. I have a $100 bill here. It's like an American 20. But you can't really rip it. Like, I mean, I'm genuinely trying. It just won't rip. I don't know why. But it's like plastic. I actually like it though. I mean, it does look good. Or at least I think so. It's not necessarily green, but I prefer it over the... They used to stick together whenever it first came out. They used to stick together, and then you go to pay for something and not even realize that you were paying double. But yeah. And it's water resistant. It's kind of cool. You guys should adopt it. I think I heard that like United States dollars is made from some type of paper that is from a tree that only the United States government has access to. Like it's like a tree that there's not a duplication of that type of paper anywhere else in the world. Is that true? Yes. U.S. currency lore. I could just be straight lying. Um, 75% cotton, 25% linen. That is not what I've heard. I've heard like it was from a specific type of paper. Let's ask Grok really quick, and then we'll get back to markets. What is U.S. currency made of? Okay. It's cotton and linen. Special cotton linen blend. Ah, this guy wasn't lying. The mix is far more durable and water resistant than wood pulp paper and gives their build. Dude, this is not what I remember. I just straight lied. I thought there was some type of this is like the Mandela effect or something. I remember there being like a specific tree or something. Like, am I the freaking Lorax, dude? How am I getting this wrong? I'm like, this is wild. I'm like, there's a secret forest out there that only the United States government covers it in bombs. Okay. Whatever. Let's go check out Coinbase CEO Brian Armstrong. Was talking. You guys are so funny. Talking about the Clarity Act, and I wanted to hear some of this really quick. Let's have a listen.
Now it's really good that we have a deadline, September 15th, and I've got to give credit to Leader Thune, who scheduled that. There's a lot of competition for that floor time. There's a lot of competing interests. He would not have scheduled this on September 15th if he didn't think it would pass.
You were to handicap it at this point. You say it's a straight. It's a winning vote at this point.
I'm pretty optimistic it'll get over 60 votes, and I think both sides got 90% or so of what they want, which, in any deal I've been a part of, it represents a lot of bipartisan work. The president was keen to mention that, and thousands of hours from the Senate and the House have gone into getting this to be bipartisan legislation. It's also a good bill for law enforcement to go protect against illicit activity. It's a good bill for the banks. It gives them 13 new powers to go grow their business. And it's good for the crypto companies. And most importantly, it's good for the 50 million or so Americans who own crypto. And so that's the big opportunity we have now to cement all of these changes that everyone's worked on in this administration and make sure it's durable for many decades into the future. Now it's really good that we have.
Hopefully that ends up going through September 15th. So we will see. We will see. Do you think that ends up pushing crypto even higher? That's kind of was actually the start of this crypto run was Trump at the White House with all those crypto technology leaders. And yeah. From which tree does Bitcoin come from, Tanner? Guys, am I talking straight like that was based on nothing? That can't be true. I remember this to be true, for real. I feel so stupid. Okay, I'm going to ask more. Maybe there's a part of maybe there's like a strip or something like a security strip. There's got to be some form where I was basing it off. No, United States bills are not made from any tree. Okay. What people might be remembering is that early Chinese paper was made from mulberry bark. Dude, maybe I'm thinking early money or something. I'm not crazy. Somebody please help me. Okay. That said, markets. Let's see what's moving. Tesla down 3.6% right now, just falling off a cliff as we speak. What the heck is happening with Tesla? Nvidia down 2.44%, but Tesla's like falling. There's obviously a lot of stories with SpaceX right now and their partnerships with Nvidia. I'm not seeing too many stories with Tesla at all today. Okay. Elon Musk's Terafab is already becoming a major new driver of chip equipment demand, with Goldman now baking its $16.8 billion first phase tied to SpaceX and Tesla into forecasts. Goldman sees global wafer fab equipment spending reaching $281 billion by 2028. Okay. They also received approval. We talked about this last, on Friday, receiving full autonomous vehicle network company permits for Nevada, which also Zoox operates in and Waymo. So they've been super forward on the robotaxi experience in Las Vegas and especially the Strip. But we're not necessarily dumping, like the whole market's not dumping. It's like Tesla, though, is down 3.7+% right now. Meta is actually, holding up really strong gains. There's a lot of companies holding up great gains here. This is wild. Ooh, I actually want to check that. How is Iran's currency to the United States dollar right now? Down. Okay. Can I see it in real time here? Okay, nothing too crazy. I only have the update from way before, actually. From Morningstar. Okay. Palantir's getting wrecked as well. Tesla's still falling. Is there any comments from you guys talking about why it's falling? You were right. Money has been made from hemp. No, I've not looked at BlackBerry. Not seriously for a long time. However, they might be doing quite a comeback. I actually did take a look at their earnings, I think last quarter. Growth rates are picking up quite substantially. Okay. Vlad Tenev just spoke with Bloomberg. Oh, I have an ad. Come on, guys. Okay, one sec. We're going to see Vlad Tenev here. We can watch this without ads. Let's have a listen to the great and powerful Vlad Tenev, and then we'll take a look back at Tesla to see if maybe there's been a reversal in the price. Here we go.
I think it was very, very clear that the president, Chair Seelig, and Chair Atkins are in lockstep working for the benefit of the country and the American people. And it's just a huge improvement in what we've been used to, because I think it's that everyone is just aligned and on the same page that America has to be the best place for investment, and we also have to lead the financial services industry. So we went into the Oval afterward, which was a lot of fun, and the president actually just asked us how the government could be working better, how we can be working more cohesively. He said, you know, there's a room with a lot of smart people, so I'd love your feedback. And I thought that was very nice too, because it just shows that, you know, he's taking feedback, and it's a good testament of the public sector, private sector collaboration that I think has been missing in this country for so long. So there's a lot of talk about, you know, what it would take for clarity to get over the line. Some chatter about, you know, the timing being not ideal because maybe a lot of representatives are vacationing. But yeah, the hope was that, you know, we control what we can control. We can get some people who have maybe been sort of like reluctant to take a stance to get over the line, and hopefully execute the passage in September.
Well, to that point, can you give us any update or insight into if negotiations are happening? Because as you mentioned, right now the Senate's on recess. So if talks are happening, they're probably not happening here in Washington between the lawmakers, at least.
Yeah, I think that's a challenge. But you know, even if folks are on recess, there's always the possibility of 3 a.m. phone calls and things like that. And
are you conducting any of those? Have you been talking to anybody in this process?
Yeah, we have been. You know, we've been engaging throughout, and of course Patrick Witt, who's been doing a great job kind of spearheading this. Everyone has just been telling Patrick, you know, he's doing yeoman's work, just wrangling everyone together, and he's been incredibly motivated to get everything across the line. We just said, hey, if you need more conversations, if there's anything we could do, we can, of course, we're working together as an industry for the benefit of ownership of this industry for the American people.
Can I ask you any specific members that you've been eyeing that maybe you think could get over the finish line, keeping in mind that Democrats have to get on board in order for this bill to pass?
Yeah, I mean, I don't know if I should call out specific members. Yeah, I think there are some folks that have been more recalcitrant, but I think we'll get them over the line.
At what point does regulatory uncertainty, whether it's on digital assets or prediction markets, become a hard ceiling on Robinhood's growth?
That's a good question. I don't think we're near that point, just because Robinhood is in so many businesses. You know, we've got you know, our more traditional businesses, which includes Trump accounts, which we're doing in partnership with Treasury and BNY for spreading ownership of equity markets to American children starting at age 0. And I think that's incredibly important, getting children to buy into this economy in this country and giving them a stake in the benefit, I think is not just great financially, but for their civic duty and for their financial literacy. So we've got a lot of businesses. We've got Robinhood Chain, which is working to spread ownership of high quality US equities worldwide. We've got initiatives for private companies. And so I think the business is very diversified. But if I look at what makes individuals confident to participate in an industry and to have exposure to crypto as an asset class, I think Bitcoin has been relatively safe for some time. You know, we have there's broad acceptance of Bitcoin in a way that there wasn't maybe 3 or 4 years ago even. But for some of these other crypto assets, I think regulatory clarity will very much help, because customers also want to know that they're protected and that the rules aren't going to shift every 4 or 8 years or so, and suddenly make what they're holding covered in a cloud of uncertainty. So I think it's going to be good to give it that durability. But I think in terms of Robinhood as a business, we're a resilient, diversified business, and we've gone through many cycles, starting with, the company began in the Obama era and went through Trump 1, Biden, now the second phase of the Trump administration. So we have to always focus on serving customers regardless of what the political environment is. And I think our mission is one that appeals to both sides.
I want to ask you about some particular parts of your business in the final few minutes that I have you, because multiple state regulators have issued cease and desist orders to your derivative exchanges, the sport event contracts. You've argued the CFTC's preemption. The CFTC chair told me that this is probably going to go to the Supreme Court, right? But I'm wondering how you're thinking about this in case the Supreme Court doesn't rule in your favor.
Yeah, and this is one of the fastest growing business lines and industries.
I think you said it's the fastest for you, right?
It's the fastest growing business line that we've had. It's gone from basically zero when we launched for the 2024 presidential election all the way to hundreds of millions. We did 6 billion contracts in July, which was up 20x year over year relative to last year. So the growth's been just tremendous, and it's clear customers want it, right? It gives them, for the first time, the ability. We talk a lot about owning stocks. This lets you own an outcome and actually put money behind it. Of course, sports has been a huge part of that. And I think it's been good for the market as well, because this was prediction markets were kind of a sleepy market, not a lot of retail enthusiasm, not a lot of liquidity, but sports kind of ignited the market, along with, of course, elections. But it's gone much bigger than elections. Now you have people buying contracts for financial events, for crypto assets. And so the market has grown very, very quickly, and the U.S. is at the center of it. A lot of the innovation is happening here. So the way I think about it is, we agree with the CFTC that these are federal products and should fall under the federal statutes. States disagree for various reasons. I mean, number one is there's a huge financial incentive from collecting taxes on these state-owned operators for that to be protected. So I think it'll be worked out, but I think what you'll see is, I don't think it's going to be a clear cut. I mean, even if the Supreme Court sides in favor of the states, I don't think it's going to be prediction markets are gone. There's going to be some line drawn, and then we'll obviously have to adapt for that. And of course, we'll be pushing for a complete and total victory. But yeah, it's never as binary as maybe it initially seems.
Okay, fair enough. I'm also wondering, related to this, how are you thinking about potential guardrails against curbing against potentially reckless behavior? I wanted to read you one of the headlines on a story that we have right now in the Bloomberg terminal. Gen Z traders go for broke in pursuit of new American dream. How are you thinking about that, particularly for some of those younger users?
Well, it would be helpful to know the contents of that article. But look, younger people, I think about their finances in a very, very different way. And I talk to a lot of Gen Z individuals who trade prediction markets, and they think about it as an asset class like futures, like equities. A lot of them are systematically looking for an edge and looking to trade these things. And unlike when I was growing up, there's just all this information out there, and there's all these tools to help you process that information, like AI agents. I mean, one of the things that's a huge topic today is, how are we going to adapt to a world where you don't know if it's an individual or an AI agent working on their behalf making the transaction, and do the rules need to change? So
Do the rules need to change to that point?
I don't think at this point. I think that to some degree what AI agents enable is a democratization of capabilities that hedge funds and sophisticated investors have had for a long time. I mean, if you were a sophisticated investor and you could hire a team of programmers, you could have them connecting to all the exchanges, looking for price discrepancies, taking advantage of them through all these strategies. Now, with AI agents, you could have your team of developers that are working for you in the cloud, and that kind of unlocks those sophisticated capabilities for trading these contracts to a lot of people.
Really quick, and honestly, I think we can end it there. The one thing I will say, though, is if everyone has that superpower, no one's special at that point. And I think those types of arbitrages really quickly go out the window. It would make it almost that, would be no point in even trying to trade those types of plays because the profitability has just dropped off. So that is important. One of the things that we ended up seeing, though, Robinhood chain, and they highlighted this, or at least Coin Bureau did, that they've highlighted that they've nearly passed $1 billion in TVL less than 2 months after launch. Sorry, I've been in the payments game a little too long with TPV. But yeah, Robinhood chain absolutely growing extremely quickly here. And I don't have a live marketplace, but I'm sure they've already passed $1 billion already, which is pretty crazy. On top of that, there was this funny little story that people were highlighting from Graham Stephan's recent podcast, the Iced Coffee Hour. Shout out to them. They just had Vlad Tenev on.
Yeah.
Wherever he is.
I just want for a lot of.
There he is. And then he was talking about how you can utilize high yield savings accounts in order to benefit. And Graham did the craziest thing I've seen him do.
Things super before, and can get you north of 3. Of course, the rational thing.
Did you guys catch that?
Can get you north of 3.
They put a SoFi ad over Vlad Tenev saying that you can get over 3% in a savings account. Isn't that nuts? Now, Graham Stephan's been a long-term partner of SoFi, but they put an advertisement over Vlad Tenev. I don't assume that they were super happy about that. Yeah, I think Sauce Man, I think you're right. Vlad's not coming back. Dude, you messed up. That's wild. Very funny, though. So, and they hold it up there for a while.
0%. And there's this other account here that can get you north of 3. Of course, the rational thing is to move all of that cash. A lot of that doesn't even need.
Like, wild, dude. Okay. I forget who picked that up. That might have been Market Man or somebody else on X, but yeah, crazy. So those are some quick highlights from Robinhood, and a little bit of a benefit for SoFi there. Makes it quite the funny story that happened for them. On top of that, semi-analysis ended up coming out, not on top of that. It's a little bit different. We're going back to AI. Semi-analysis ended up highlighting a story where they talked about testing the $200 a month Claude plan versus testing the $200 a month OpenAI plan. Now, we've had some definite beliefs around this, but in order to understand the exact price of a token, they are charged appropriately on their API costs. But we've known that the steady monthly rate plans are heavily subsidized. How much so? Well, SemiAnalysis wanted to find out that story. So they ran a bunch of tests in terms of how many tokens, and they know that the cost is a certain way because they ran the exact same experiment purely on the APIs. And the amount of tokens that they could get on the limits every single hour, maxing it out for a $20 a month plan was about $400 a month on the APIs. $100 a month got you about $2,000. $200 a month got you about $8,000. On the other side, for ChatGPT, for Plus, Pro, and Pro 20X, you got $20 a month gave you $700 a month worth of their API tokens. And then all the way up to $200 a month gave you about $14,000 worth of the API tokens. Okay. This is why if you have a benefit or a potential to upgrade your plan rather than pay for the $20 and then use the APIs for extra, to upgrade your plan is so much more efficient. Okay. That allows you to get so much more out of the models because they're heavily subsidizing it, that type of use, because it's the average person. All right. So upgrade to the highest plans if you're a large user, because the actual APIs are much more expensive. Now you're keeping OpenAI and Anthropic from being less profitable. That's not your concern. Okay, Cantor Fitzgerald just gave a $99 price target on IREN based on target multiples of 7 times calendar year 2028 enterprise value to EBITDA. And IREN is down 3%. We're about to have a price here on IREN that once again is falling below $40 a share. Dude, I don't even want to be an IREN shareholder, but I think that there might be a disconnect. I didn't want to be a CoreWeave shareholder either. I mean, I really wanted to just be an investor in Nebius, but there are these disconnects in the market that happen sometimes that bring these stocks down to just ridiculous prices. This is Iris Energy, not Iran. Nvidia buying IREN at 75. I mean, they had the option to buy, but all those stories make me not like IREN the way I like those other companies. Nvidia did buy Nebius and CoreWeave. They have options to buy IREN. It's different. And saying in Nebius is $200 does not mean anything. One, I mean, market cap exists, so that's a different story. But two, the company performance, how they're setting up the chips, the partnerships that they're making, the ability to actually find large deals like Meta and Microsoft, these are really significant. But like, I don't think IREN should be the price or premium of CoreWeave and Nebius. I'm not even calling them to even out. But that doesn't make them worth zero either. And the fact that they're selling off so much is definitely surprising. Okay, I love you, but I've seen a lot of other people on other channels say Nebius is a sell. Good for them. It's a market, you know. A lot of people along the way up, and no one will ever say that they did. There was a lot of sell side and not sell side analysts. There were a lot of analysts who had sells and people on X and YouTube who were anti Nvidia the entire way up. Some of them, like Stephen Fiorillo, changed their mind. But because another person says that they don't like Nebius does not mean that I have to not like Nebius. I've never asked a single one of my viewers or anything to buy or follow me into a trade that I'm invested in. If you believe that other person more, don't buy Nebius. You know, do your own due diligence. It makes no difference to me. But to then come here and say, hey, can you talk about this? Like, what do you want me to say? I like the company. I think they are probably the best performer in the neo cloud market, And that's why they have the premium that they do. They are they're breaking out of just the sort of neo-cloud state, although they are super small, so they'll be sort of classified as that. But they are definitely doing the right steps to be considered a hyperscaler eventually, which would be to have a full service platform at gigawatt scale, serving many, many customers across multiple data centers. But I bought SoFi because of you. Don't do that. We have very different, like, I don't always buy companies to say, hey, this company will never go down. And then I see people, they go, hey, your calls were crap because this company had ended up falling from where you said that you were buying. And it's like, okay, but if my long-term thesis of this company is that they will be constantly growing at 40+% rates over the next 5 years, well, then why am I concerned if it's down 5, 10, 15% from when, you know, we talked about it? Or even continuingly holding, someone asked if I own Micron. I do own Micron, right? My average in that name is like $370. So the difference between 1,100 and 900 and going back and forth on whether or not I've made a good decision, it's like, you're talking about a 3 or 4x. Like, it clearly was a good decision. Now, I believe it's going to continuously go higher because you're seeing Nvidia increase sales. And like, I think it's going to last a little bit, but obviously all the stuff around high bandwidth flash and HBM5 and 3D DRAM, like there's so many fast changing stories right now, but Micron's going to be a part of them. But make your own decisions whenever you guys invest, please. Why can't you predict price movements, Tanner? I've not really gotten good at technicals. Yeah, I don't know. It's something that I do need to get better at for sure. But it's just like morally, I just think long-term investing is strong. Did we talk about SpaceX, Nvidia developing a chip going into space next year? Yes. A lot of people are way too exposed to AI. If AI doesn't pan out, people will get wrecked. But what about the people who are not investing in AI? Like, I think that there's a lot of people who easily point to a type of risk profile that I have and say, this doesn't fit what I like to do, and that's why it's bad. And it's like, dude, if you have a low risk tolerance, then yeah, don't invest that way. But I don't know. Did you hear me cry whenever crypto fell, or whenever some of the high risk positions that I've ended up holding before have fallen? Of course, if AI doesn't work, people will get wrecked. But that's like saying, that's completely obvious in any single industry. People can point to Altria Group being an extremely low risk, high dividend position until the government regulates away smoking. And then that becomes a way higher risk position than Nvidia. I don't know. Tech and technology companies for the last like 20 years have been some of the best investments. If you look back after sort of like the 2000 bubble, the biggest companies in the world was like ExxonMobil. Okay. And it's not that ExxonMobil has done terribly during that time. The reason why they're not the biggest company in the world is not because they failed. It's because other companies have done very, very well. And there's been a clear, and you could say, you know, don't say this time is different or anything like this, but it absolutely is, where we have digital businesses now that run not brick and mortar. You're talking about technology that serves customers, software that runs itself and they charge subscription. We've never, ever in the history of, 100 years of the stock market have seen businesses with high margins like we have in the software industry, not based on supply constraints, just based on that's how much people are willing to pay up for software. So then companies like Microsoft end up becoming some of the biggest businesses in the world, Apple, Google, all of these businesses, because software tied into hardware is an amazing business model. AI might be a boom bust in the overall valuation, similarly to the .com, but I don't think AI in any form ever goes away. I think that's a genie you will never be able to put back in the bottle. There will be permanent and long-term productivity gains from artificial intelligence. That's huge. I love that. I'm betting on that. And I'm not betting. I think that the thing that people really, really got wrong in the .com bubble is that we stopped looking at revenue and earnings, and we started looking at KPIs like clicks and eyeballs on websites. So things like pets.com ended up appreciating a lot, even though everyone knew that the price to earnings was 700 times. Okay. And there were a few different companies, especially in Japan and everything, that were promising to show profits by a certain point. They ended up showing off big negatives, really started the collapse. Some of these companies ended up falling 90+%. We're now staring down the barrel of artificial intelligence. People are worried about whether or not AI is going to be working, which it's what does that mean? It is working. And these companies' profits and earnings, the multiples on these businesses, not based on selling tokens exclusively, just doing the exact same business that they had before. Like Meta, social graphs, Google, search, which they've continued to just have high profitability on that. It is trading at 20 times PEs, 25 times, 30 times PEs. It can be high, but it's not 700, 500, multiple hundreds, zero profitability, no pre-revenue. None of those companies are going to the top. I'm not out here promoting the high-risk sound hounds and stuff, which also, I've got no clue. Maybe those are great investments. But, those are higher risk. Those are speculative names. The name that I am promoting is the biggest company in the world, and that's not just based on the multiple in the valuation like what we saw with Cisco back in the day. We're talking about the most free cash flow generative business in the entire world, breaking world records, more free cash flow than Apple will happen in Q2. Very different story. But even then, if you don't want to buy that, and that's part of the circular financing nature, and I completely understand that, buy Microsoft, buy Palantir, buy the software names. Everyone is saying how the valuations are justified. I can't tell if they truly believe it or if they're scared and trying to convince others to buy their overvalued stocks. You're talking about you're saying that what I'm guilty of is a tiny YouTuber pumping a $5.5 trillion business. Just think think in your own head what you're saying right now. What you think I'm guilty of is moving the markets on the biggest company in the world. I'm not in speculative names. I'm buying, or I mean, I do have speculative names, but those aren't even the ones I'm talking about right now. I'm talking about the Mag 7. I'm talking about the largest companies in the world: Microsoft, Google, Amazon, Meta, and Nvidia being not overvalued. That is the companies that I'm betting on. I don't know. Okay. Tanner, are there new companies that you're looking at taking positions in? Not really, no. I just buying a lot of what I'm constantly buying. And I think that's like, it's funny, like you'll bring up a new name, and then at the time, because it hasn't appreciated, people don't want to take positions on those names. Or like I find there's two things. I pitch a name that hasn't moved, and then people go, Tanner, stick to Nvidia, like stick to what's working. This one, that ain't it. Like even Wix has gone from like $40 to $80 in quick succession recently. And, people didn't like that I was even talking about that name because it was like old and legacy. And then the names that I do talk about that have run, people go, okay, well, what's the new name? Because that one's already ran. And they don't want to buy those ones either because they've already run. I don't know. Tanner is subliminarily, I can't say that word. I'm pumping Nvidia because I'm wearing that hat. No, it's Nvidia day. I did my predictions today. Amit's way more level-headed than me. He does not engage with chat the way that I do. But I genuinely do like it. I know I can come off like super angry sometimes. You shouldn't meet my fiance, but I'll tell you, she's an absolute saint for dealing with my because sometimes I get so worked up about things that aren't. I remember like one of the first times I met her family, and it was actually, I was having a conversation with one of her aunts about Tesla. And I was so involved in that company. It was like one of my biggest positions at the time. And they just thought that Elon was a quack, and obviously a lot of people still do, but that he wasn't going to make a single dollar for his investors. And I was on the opposite side. I had invested a lot of money into Tesla. Fast forward into time, I was right, they were wrong. But I remember there being like, as I was having that conversation, it got back to my girlfriend that like her whole rest of her family was like, why is Tanner fighting with this person? And then I was like, I remember it getting back to me, and I was like, oh, I wasn't fighting at all. I was engaged. Like, finally, I'm having a conversation where I'm like actually getting to be passionate about something. And that passion can sometimes come across as being triggered or being very angry. My girlfriend just completely, or my fiance just completely gets that it's just, it's passion. So genuinely, we never, ever fight, like ever. But do I give her the passion? Yeah, I get heated, but we never fight. Tanner finally attacked me earlier. Dave, that's because you were being an idiot, but you're still here, and I appreciate it. Okay. I'm the same way. The more caffeine, the worse it is. Well, that might have something to do with it then, because okay. Come back in 10 years after marriage and kids. Dude, everyone's been telling me that my entire time that I've been with her. I've got brothers and everything. They've all got long-term relationships, and they're like, yeah, I mean, you guys have been together 1 year. Like, you'll learn the things that you guys fight about. And it's like 8 years now, and we still do not fight. And we go, okay, wait 10 more years. Like what? We're going to have our first fight in after 18 years of being together. All right. Tanner, your friend Adrian here. You are passionate about Meta. Should I invest or wait for the fall? I think whatever you think fair value is, if it's under that number, that you should buy into the name. That's I can't guarantee you that there's going to be a fall in the future. So, you know, you want to buy into the company as low as possible, but you also don't want to. Let's go ahead and listen to Stacey Raskin was on CNBC earlier talking about Nvidia earnings. I think this was actually last week, but I still want to hear about his thoughts on Nvidia going into Wednesday's earnings.
Thank you for that. For more on what to expect from Nvidia next week, let's bring in Stacey Raskin, Bernstein Senior Semis Analyst. Stacey, great to have you. What are you most listening for as we get these numbers?
Yeah, you bet. So they report next week on Wednesday. I think the numbers broadly should be very, very good. We're entering right into the start of the Rubin cycle, which is their next generation platform. They've already given kind of color for growth through this year and actually into next year. And actually, we're hoping that they may even take that up. They said $1 trillion, unbelievably, over a 3-year period, which would suggest something close to $500 billion in data center revenues next year. I think if you look at some of the build plans and things like that for the new platform, numbers that are higher than that start to become pretty plausible. And so I'd love to see if they would actually commit to that or not on this print. Beyond that, I think we're looking for the sustainability of gross margins, particularly as things like memory pricing and wafer pricing is coming up. And they priorly said that they could hold gross margins in the current range, which is sort of mid-70s, and love to see them continue to confirm that. And then finally, I think any color on some of the financing backstops that we've heard recently. There's been a lot of news flow around some of the financing for data center projects, which could be hundreds of billions of dollars. And NVIDIA, in some sense, has been sort of donating their credit rating, kind of, and offering backstops for some of those deals. And so any more details we can get on that, I think would be useful and helpful.
Stacey, it's Karen. Thanks for being on. So do you think that last thing that you talked about, this credit issue, is bigger than the actual earnings or what the gross margin is? How much of the story is really resting on that?
Yeah, I don't know if the story's resting on it, but I mean, the dollars that are looking to get spent are large. And there becomes this question of how to pay for it. And I think all the questions of the returns and things that can drive that, in my mind, are starting to get more and more settled in the favor of the idea that there is a return. But some of the customers that are potentially looking to do this, they're startups, even big startups, but they're startups, and they don't have the kind of track record. And so the fact that there is a backstop of the leases and other things, I think, to help that get going, I think is okay. NVIDIA has clearly a lot of money and balance sheet to deploy. It's another one of their strategic advantages beyond technology and ecosystem and everything else. And I mean, personally, I'm kind of hard pressed to think of a better use of their excess cash versus investing, in the ecosystem to grow it and develop it around their products. But there's been lots of headlines and lots of big numbers and not a lot of details on how this stuff is really going to work yet. And so I think color that they could give on that would be helpful. I think in helping to put some investors' minds at ease on some of this.
So, Stacey, it's a great company. It always seems to knock it out of the park when you bet against them. Why the underperformance? And even if they have another stellar quarter, what makes me believe that my money should be put into that stock that's underperformed drastically its peers?
Yeah, and to be fair, like I'll be honest, I think it's going to be a good print. I don't know what the stock is going to do in the near term. Like, most of my coverage is reported earnings. By and large, they've all had very good prints, and I barely had any stocks actually go up the day after the print. So, like, I guess we'll just have to see. That being said, like, everybody's getting excited about, they've been excited about AI. Like, none of AI ultimately works if NVIDIA is not working. The stock has treaded water a little bit of the last year or so. Investors have been playing more of the things that I think were viewed as having higher torque to the upside. There was a big thing around the bottleneck plays, for example, for quite a while. I would say that recently Nvidia started outperforming. I think your chart has showed it a little bit. Some of that starting to reverse. I think if you look at least over the last month, the SOX index is down about 5%. Nvidia is actually up 4 or 5%. So it's actually started a little bit of a reversal relative to the rest of the group over the last month or so. And I would be hopeful that that can continue because, like I said, I do think we are right at the beginning now of their next product cycle, which those product cycles tend to be good things for the stock when they get going, and we're there. So I would hope that that can reverse. In this environment, though, I'll be honest, I don't know what the stock's going to do, but I do think the numbers will be good.
That's a good highlight there. I mean, the product cycle, absolutely, we're stepping into by far their largest product cycle. This is not just launching a new architecture, which obviously Grace Blackwell was extremely important, but now we're stepping into Vera CPU and Grok LPX. So we're launching 3 new products all at the exact same time with their best, suite of networking products that's going to help to connect them, which also allows for bigger purchases as well, because you're not just going to be buying one product, you're going to be buying sort of an AI factory, like a mix of all those products that connect into one large cluster. So NVIDIA's earnings per data center is never going to be higher. Well, I mean, it could be higher in the future, but it will be the highest this cycle round. There was Jonathan in the chat. I don't know where his thing went, but it's definitely good to highlight. I thought what he said was important. The announcement of rising prices might be NVIDIA trying to get ahead of the miss on gross margins. Definitely could be, right? Because it's not like we're just seeing the memory prices increase now. It's been over the last little bit. So maybe gross margins are going to be worse than expected. But then look at the gross margins that we've seen over the previous quarters. As memory has also spiked in those quarters as well, we've seen gross margin increase to over 75% once again. So I don't know. I think they've been able to handle the price increases quite well so far. Yeah. Okay. Ladies and gentlemen, that has been it from me. However, it's 3:42. Amit starts in the next 2 minutes. Go share my love with him. Tell him that I'm excited for Wednesday and that I hope we all do very well. So until then, until next time, thank you all so much for watching. Really do appreciate your time. And I'll see you guys tomorrow. Bye for now.